Right, happy to see you guys. Okay, I'm connecting to your chat box. All right, connected. Okay, we'll start then. So, welcome back to today's class again. So, in the last class, I think we were seeing the cash flow only. We were continuously seeing that. And in that, the funds flow from operations we were seeing. So, how to arrive this funds flow from operation? Because the other two, investing and financing, is direct. But when we talk about funds flow from operations, we need to do certain workouts. Why is it so? Why? Because see, to arrive at that, we if you are taking only the cash, only the literally the cash payouts and cash receipts, then that by that way what and all is related to operational, that you should first think of, correct? So in that, what will come? Sales will come, receipts from the debtors will come, payouts to the creditors will come, and payouts to the employees will come, payouts to suppliers, so many things. So whatever you have literally made payment or whatever you have received literally, that will come, correct? So to arrive that, we have two methods. One is direct and indirect. So direct is what I said, that you will take only the items which has an impact on the cash. Non-cash items we won't. But what happens, we are using indirect method in our financial statement basically. So in that, how do we arrive? So indirect method, we will arrive the cash flow from operating activities from net profit. All right, net profit means what? Is it before tax or after tax? It is after everything. We call that as PAT, profit after tax. Dividend, if dividend is declared, though, you can minus the dividend, then you can take it. All right, so profit after tax, PAT, or net income after tax and dividend. So first thing, you know that I have explained already those first two tabs here. One is like you have to adjust for non-cash and non-operating items, if anything that has impacted the P&L. All right, yes, yes, that is Study Buddy. All right, I don't know your name, but I like your name, Study Buddy. All right, Pat, correct. All right, so first adjustment, you have to make it for non-operating and non-cash adjustments. Okay, so here non-cash adjustment is very simple, because you have to check, ma'am, first of all, understand why you need to do that. Guys, for that, you should be knowing how a P&L will look like. I have already told, P&L is the after paying dividends till PAT. It would be profit after tax and dividend. After tax only you will be paying dividend, na? If you would have paid dividend, to take after paying tax and after dividend, you can take, or you can take PAT. We usually call that as profit after tax and dividend. Is a full form we have given here. If you have declared a dividend, you can take it. If you didn't declare dividend, you can take PAT. That's fine. All right. Now, after tax only, before tax, you cannot declare dividend, first of all. All right. Now, coming back. So, first you will be earnings available to the equity shareholders. It's not earnings available to the equity shareholders. It's not that. Because then in that case, so you won't declare equity dividend then. You will be declaring, if you are declaring dividend for equity, then that also has to be cancelled out, no? So dividend, though, it is every dividend, all the dividend, whether it is preference or whether it is equity. All right, it is everything. After dividend means all the dividend. It's cash flow from operating activities in the end, no other ones. In the sense, Satyanarayan, I'm not getting your question. Where it is the end? Why it is cash flow from operating activities in the end, not other ones? What is meant by other ones? What you are referring here? And All right, study buddy got that. Earnings available. Earning, it's not equity shareholders. Please remember it is profit of the company. All right, it is not only to the equity shareholders, it's everybody. All right, dividend means it includes everything. Satyanarayan, I need your question to be elaborated. I don't get what you mean to say. What is meant by not other ones? I'm not getting it. It is already done. Financing and investing we have done. So that's the reason I didn't put here. Investing and financing. I think you didn't see the earlier classes, I believe. Is this your first class? Probably. That's the reason, I guess. Because we have done already investing and financing. Because those two are very straightforward and there is no ifs and buts. It is so straightforward. So we have completed that first. And we came to the operating activity because operating activity need to understand few things like working capital changes and all those stuff. And it has a direct link with funds flow. So that's the reason, which is in another syllabus, another chapter in your syllabus. All right, coming back. Now, so we will be adjusting for non-operating and non-cash. So you need to understand how a P&L looks like. I have already told the P&L comprises of all your expenses, all your incomes, whatever the company has earned and incurred during the year. Correct. So which means even the interest received will be there. Correct. And interest paid will be there. Right, interest received will be shown under other revenues and interest paid will be shown under finance expense. All right, and then depreciation will be there, amortization will be there, profit on sale of any assets that would be there. Correct now, or loss on sale of asset that would be there. In your P&L everything would be captured. As an accounting you would have captured everything. Correct. But tell me, we know that interest received or interest paid will be shown under which activity? Financing and investing activity. Interest received will be coming under investing, interest paid will be coming under financing. Correct now, the same way the sale of assets will be coming under investing activity and purchase of assets will be coming under investing. Correct. No, so that loss will not be shown there because loss is not a literal cash impact. Correct now, because there was a purchase price that happened some years before and there was a sale profit, that money is coming in and this year. So which means you are calculating that to close that ledger you have passed that entry and you have arrived at loss. But that loss means it is not like exactly cash impact. The cash impact is the sale profits what you have received. So that one you have shown under where? Investing activity. Correct now, right? So that's the reason why when we are taking out from the profit, all right, when we are deriving the cash flow from the profit, we are removing the impacts on those profit. All right, so in my P&L, if I take, there will be so many impacts. Like what? Non-operating impacts will be there, non-cash impacts will be there. So depreciation is a classic example. Depreciation is nothing but utilization of the asset during its lifetime. So to account it, we have given up a concept called depreciation. Because asset would be capitalized. When I purchase a machinery, it won't be expensed. The entire cost will be capitalized and it will be taken to the fixed asset category, PPE. Correct, na? In the balance sheet. Right? So, but every year I am using it. So I should be, I should give that life of that asset. Right? No? So every year I am using it. After 10 years, that asset will be scrap. So suddenly, will you be removing it from your asset? No. That is not the right way to do accounting. Correct, na? So always what we are giving there, okay, fine, we will amortize over its lifetime. All right, so then we introduce a concept called depreciation, wear and tear, because that asset is getting used every day in, day out. So for that, we need to give some provision for it. So literally, you are not incurring any cash impact, but due to, you need to account it, we are giving one entry. So that is a non-cash entry. Correct, non-cash item. So that impact will be there in the P&L. Loan taken for purchasing of a machinery, is it investing or financing? Purchase of a machinery would be coming under investing and loan would be coming under financing. There is two-way entry. Can you tell me the entry for this then? What would be the journal entry? Can you tell me that? Can you tell me, study buddy, can you tell me the journal entry? In that itself, you have your answer. So, purchase of machinery would be your investing activity, which is an outflow because machinery is coming in, right? So, that would be an outflow, and where you are taking a loan and you are raising a finance there, correct? Borrowings there, right? So, that would be coming under where financing activity. I hope this we have discussed in the last class, I guess. Last class, matlab, 2 classes prior to it. All right. So I think those videos are there. You can go and check about investing and financing there. We have discussed so many things. When you take debentures, when you issue debentures, what will happen? When you invest in debentures, what will happen? When you take deposits, what will happen? When you invest in deposits, what will happen? All those things we have discussed elaborately. All right. So please make sure why that particular activity is happening. So that will directly take you through investing or financing. Right now, coming back to operational activity. So first we will be adjusting. I hope this first 2 tabs we have seen in the last class. Now, once you do this adjustments, you will be arriving at what? Funds from operation. Now, this is called funds from operation. Now, why it is called funds from operation and not cash flow from operation? I still need to adjust for my working capital changes. So, what is meant by working capital? Working capital, remember, current assets minus, this is the formula, current assets minus current liability. But what is meant by that? Working capital means how much capital I will be requiring to run the day in, day out operations. All right, which talks about my liquidity. Liquidity means how well I can manage. All right, or how well I can manage day in, day out, everyday work. This I have told you when we talked about, I don't know which class, your class or some other class. Anyway, I'll tell you this. Say for example, I have, when we talk about this cash equivalence, I hope you guys remember, right? Here only. I have, I have a land, I have a house, I have, what I can say, I have some other, jewels, forget about jewels, land, building, and, I have 2 buildings, 3 lands, all those things. I am earning, every month I am earning, say, 50,000 rupees or 60,000 rupees. Now I'm going and asking a loan. Okay, or I have to pay my EMI to an extent of 70K per month. Now tell me, is it a correct way or am I eligible to borrow such amount? Am I eligible based on the surety? Yes, but would you do that? You won't do. Why? Because you are not liquid enough to meet that commitment, because your monthly revenue is only 60K, where you are creating a commitment of 70K, your liability, your monthly commitment of 70K, whereas your, whatever you are getting it, current liquid position is only 60, still 10,000 rupees you are in shortage. So you will be in trouble. You will be finding it difficult to, I'm not saying you cannot meet, you will be finding it difficult. Obviously, you have to resort to some other borrowings. But you might be having what? Assets. Can you sell that asset and pay 10,000 rupees? No, you won't do that. Right? So that is called liquidity. Right? So working capital, so that's called working capital. So working capital means what? How much I am having, how much I need to run my every day in, day out business, operational activity. This always talks about the liquid position of the company. That's why we are going for OD facility. I explained you. Correct? Now, when we talked about financing activity, OD we are going for what? Because I need to pay the salaries today. Correct? I need to pay because 30th of December, 30th of November, I need to remit the salaries to my employees. I might be having land in my company. We have invested, lakhs and lakhs in mutual funds, lakhs and lakhs in equity shares. My company is performing so good, everything. But I have a receivables of, say, my sale is, say, monthly sale is, say, 15 crores. My receivable is 30 crores. which means I am selling on credit, which I am not getting any paisa inside. It's affecting my cash flow. Correct, na? You are getting it. Receivable is there, I agree. But cash flow, is it there literally? Or the answer is no. Now I need to sort some or the other way. I have where I can generate cash. That's why I'm going for OD cash credits, no, with the bank. Immediately you give me next 2 days, funds will be coming in, I will be clearing it out. Correct, na? Right. So that is the reason. So when you have to account for those working capital changes, then only you can arrive at your cash flow from operating activities. You are getting it? So apart from P&L and adjustments in the P&L, that won't give you the exact cash position from your operational, because in your P&L all your credit sales will be accounted, all your credit purchases will also be accounted, all your outstanding salaries will be accounted, all your accrued expenses will be accounted, prepaid will be accounted. You are getting it. So in your P&L, it's not that whether you have literally paid or not, we don't say. You are getting it. Yeah. So you don't see that. Suppose salary, I have paid 100 people are there. I would have accounted 100 people ka salary in my books. But literally I would have made a payment only to 95 people or 98 people. 2 people I wouldn't have paid because due to some other reason. But that 100 people ka account will be coming in P&L. Now the 2 people ka cash didn't go only. You're getting it. 2 people ka salary didn't go out of my bank account. Literally speaking. You're just seeing on top of the financials, the top of the P&L. But inside it, whether the cash impact has happened or not, you have to dig in. Correct, na? So that is the reason from where I can see that, ma'am. You can see it from your working capital. So working capital is nothing but current assets, the relationship between the current assets and the current liabilities. You're getting it? That is the true meaning of it. All right. So you have to, if you want to know whether how much cash literally you generated from your operating activity, you need to adjust apart from your P&L adjustments. After adjusting non-cash and non-operating items, you need to adjust even working capital. So how do we do? What adjustments we need to do? There are working capital means it is only 2 items, current assets and current liabilities. You are getting it. So now what will I do? How do I know that? Usually, practically speaking, how do we do? I'll tell you. But you can memorize this as your formula, but practically we will be comparing it with two period. All right. In our financials, what we will do is always, I hope you guys, I have shown you guys how the your class only has shown you, right? How the financials will look alike, right? I think schedule 3 format, I think I have shown. So always we will be giving how many years ka comparison, 2 years ka comparison we will be giving it, right? All the financial statements we will be preparing and we will be showing 2 years ka comparison. All right. So current year will be on the first tab and the previous year will be on the, that is current reporting period and previous reporting period, that will be on the right hand side, right? So what happens, we always do a comparison between the previous year and the current year, and we will take the difference between these two. All right. So cash flow will be prepared, especially this particular working capital changes will be prepared. Practically, it will be prepared from 2 period ka balance sheets, because current assets and current liabilities will be shown under where? Balance sheet, right? So from the balance sheets, 2 period ka balance sheets, 2 reporting period ka balance sheets, you will be finding out the difference between those items will be treated, will be taken under this particular working capital changes. Now, fine, ma'am, I understood previous year, current year, I will be minusing out. So then I'll take the difference. But do I need to add or do I need to reduce it? What would be the impact? That is the question, right? So here now this is the balance sheet. See here this. Hey, shucks. 1 minute. It's going. All right. Yeah. So this is now current liabilities. Under that, trade payables are there. So this is current year and this is previous year. Okay, trade payable current year might be say 100, and previous year it was say say 120. Okay, now here current asset, under current asset we have trade receivables. We'll keep it simple, trade receivables. Now under this we have current year we have what I can say 150. Previous year we are having 175. Correct, we'll keep it 175. Okay, we'll keep it 175. All right, so this is the info. Now we know, ma'am, the difference between 2 years, you said comparison, this is 20, ma'am, and this is 25. Now what should I do with this figure? What should I do here? Whether is it plus or minus, what is it? So for that you need to do this. You're getting it? Now understand. First remember this, then I'll explain the logic behind it. Add decrease in the current asset. Okay, decrease. Remember, for one it is ulta for the opposite. You're getting it? So decrease in current asset, which means increase in current liability. Correct now? So this should be added. This should be what? Added. All right, so if current year ka current asset is decreased, all right, from the previous year, if there is a decrease means add it, if there is an increase means then minus it. You're getting it? So remember one thing, you can remember here. So decrease in current asset should be added in the cash flow. Decrease in the current asset should be added in the cash flow. 1 minute, let me clear all these things, then I'll explain. So decrease in the current asset will be added. Now, ma'am, then increase in current asset, ma'am, reduced. Okay, you said ulta. So increase in current liability, ma'am, added. So decrease in current liability, reduced. Remember this. So if you remember one string, you can remember everything. I hope now you had understood the trick of remembering it. Now we'll go ahead with the logic. All right, why we are doing plus and minus here. All right, now the example only I'll take. Trade payables. First let me go with the current liability. Trade payables. Current year, this is previous year. Current year it is what number I gave? 100, probably 120 I gave. Let me, that's okay, we'll take trade payable 100 and 120. Now what does it mean? Previous year 120, which means opening balance. Correct. Previous year ka balance sheet will always say the balance as on that particular day, 31st March. This is 31st March on 22. This is 31st March on 21. Correct na? So which means in the beginning of the year, financial year, current financial year is what? This one. Okay. So on the beginning of the current financial year, I had a trade payable of 120. Okay. At the end of the current financial year, I have only 100. Tell me, what does this impact? Have you paid your suppliers? Trade payable means suppliers, vendors, right? So have I paid my vendor or not? I was at 120 rupees I am supposed to pay. Now my closing balance, what I should pay is only 100. So what does happen now? What is the impact there? Have I paid or not? Have I increased? Come on. I think there is 1 minute lag. However I do, there is a 1 minute lag. I don't know. Come on guys, already there is a lag in, there is a minute lag, I guess. I'm saying. Nobody? So what you did, you didn't do anything? Just like that it came 100? Nobody? All right, to my surprise. 1 minute. All right, it got connected again. All right, now coming back, you have paid, which means I started my liability, I started my payable at 120. Now my payable is at 100, means 20 rupees I paid. It's an outflow. It's an outflow. Correct? No. In between, something would have happened. You would have borrowed new vendors would have come. But at last, what is the impact? You tell me. 20 rupees you have that year you made a payment or not. Ultimate impact I'm talking about. You cannot go that is not required also. Even if you do, the same answer will come. You're getting it. So 20 rupees you have made a payment. Correct? So which is an outflow. Outflow means cash is going out. So you need to reduce it. Correct? No. You need to reduce it. So that's why decrease in current liability. What you have to do? Minus. This is what we have seen. No. Here have I given it or not? Decrease in current liability less. So this is the meaning, because I have opened my account at 120. Now I have 100 rupees payable, which means 20 rupees already I settled. I paid literally. There is a cash impact of 20. So my cash has gone out of my business 20. So I need to reduce it. So I am reducing it. Are you getting the point? You can think in the ulta way. Suppose these things were in opposite positions now. Let me remove this. Now this is in opposite positions now. Still I have to pay. You're getting it? Which means, guys, understand. Ma'am, how come there is an inflow you are saying? Okay, that first thing I understood that you paid 20 rupees. There is a cash impact of, 20 rupees. So that's the reason you are, minusing it. I understood. But here though, how come you are taking it as addition? There is no cash impact now, which means how come? Guys, understand. When I increased my trade payable, 20 rupees it got increased. How come it is added? Guys, I got goods worth of so much inside. So my cash flow, it was not paid. You are getting the point. I didn't pay. There was no outflow. There is no outflow. But at the same time, I have taken the goods on credit. You are getting it, which saved my working capital to that extent. That is the reason that we are adding it. The 20 rupees we are increasing the current liability, we are adding it. Why? This is the logic behind it. Why? Because, guys, what is a credit period? What is a credit period? I purchased the goods. So we are asking the vendor, give us the 30 days credit period, 45 days credit period. Why? Because I have some breathing space that I have inwarded the goods. My business will not be impacted. At the same time, I have the breathing time. I have a breathing space where I can arrange for your funds. So I know there is no pressure on my cash inflow. Are you getting the point? You are getting the point. So this is very important. Always we will be doing. You're getting it even in where I'm working right now in my company also. We are having 3 vendor payments. I used to sit with the various vendors. We used to negotiate for the, payment terms, where crores and crores of bills are involved. Every payment cycle will be releasing around 7 crores, 8 crores. So we will be sitting and talking, negotiating with the vendors. We will say that, okay, you give me the 45 days credit. Because I'm clearing everything on time. So give me 45 days credit. Or you give me 30 days, but I will be releasing the payment in two terms. 15 days once I'll be releasing. After 30 days, I'll be releasing one in the first 15th and one will be in the next 15th, which means the 30th. So here what is happening? I am reducing my cash outflow. You're getting it? So this is reducing my need for money for running the business. You're getting it. So it is not I don't say that it is a saving or something. I can say that the pressure on my fund, the pressure on my working capital will get reduced to that extent. My outflow will get reduced to that extent. That is the reason increase in your current liability has been shown as an addition to your funds from operation, because you have received goods to that extent. You have received your services to that extent. You're getting it, but you have time for that to pay. Are you getting the point? So this is how the finance will work. This is how the literal, literally it will work like this. All right, earlier we had this cash flow is a current classic example in our business, because since it's a fintech, we will be making. Earlier we had 2 payment cycles. Now we worked on because our receivables were improving, we were collecting, our collections were improving. So what we thought is, okay, we'll go for a 3 payment cycles. Why to put pressure on 2 dates? Because in one day I need 10 crores in my hand to release my vendors payments. But if I split it into 3 weekly, one payment, if I do that, my pressure on the fund, all right, I don't want 10 crores at a stretch. I will be needing 4, another 4 or 5, so I can split it out. So that's the reason increase in how much ever it is increasing, that will be it will give you the breathing space. It will save your interest cost. It will save your outflow. That's the reason it is shown as an addition. You're getting it. But too much of, keep on increasing is also not good. But, you should generate cash to meet out. That is a separate syllabus that you'll be studying in ratio analysis. You're getting it. Whether, if you keep on increasing current liability, what will happen? You are getting it. So that's the reason it is shown as an addition here. Now coming back to your trade receivables. All right. Now trade receivables like this. Now understand, trade receivable means what? I have sold the goods. Now that guy has to pay me. I have sold the goods on credit. That buyer has to pay me. Correct, na? So how much he should pay? Whatever he is supposed to pay, he should pay. Now, think that guy is not paying at all. I have sold the goods, but that fellow is not paying me the money. Correct? No. So, my cash flow is impacted there. Right now, I have sold the goods. I didn't receive the money. Correct? No. So, I didn't receive. So, which means I'm impacting my cash flow. It is as good as an outflow. Correct? No, because the goods have gone out. I didn't receive. Right? I didn't receive paisa. So which means it is as good as it's an outflow for me. That is the reason if my trade receivable increases, all right, it will be reduced from my operations cash flow, because that guy is not paying me. I am not getting paisa. Literally inflow is not there. Suppose ulta. Earlier it was 120. Now it is 100. Means I received 20 rupees. Which means decrease in the current asset. It goes with all current asset. I took the example of trade receivable, which is under current asset. So I have taken. You take for inventory. The same logic will apply. You take for inventory also. Inventory decreased means I have sold many inventories, which means I would have generated cash out of it. Correct, na? Stay stock. Inventory is your current asset. Suppose opening stock is say 100 rupees. Now closing stock is say 80 rupees. Means what does it mean? I have sold 20 rupees worth of stock. So money has been generated. So there is a cash inflow. So I have to add. You're getting it. The same way inventory keeps piling up. Inventory keeps piling up, which means I didn't make a sale. The sale was not happening. My closing stock was increased. I have spent so much money on that closing stock. So which means there is an outflow there. So that's the reason increase in the current asset will be shown as a reduction, and decrease in the current asset will be shown as a addition to your funds from operation. This is the logic behind it. You take any current asset or any current liability, this logic will apply. You are getting it. This is for your theory behind it, but the formula is add decrease in current asset. Add, decrease in current asset. Remember that. If you remember this one string, you can aram se find out the other things. You are getting it? And minus increase in current asset. That's it. Right? So this is how you can derive. All right. So once all this done, finally income tax paid. Income tax paid. Direct taxes paid. Remember, ma'am, why it is operational, it is we are showing ma'am income tax. Please remember, income tax is neither your expense nor your income. Okay, income tax refund, it's not your income, but it's not your expense also. Why? Because it is a statutory commitment you will be paying. Okay, but why it is shown under operating? As guys understand, income tax will arise only when you earn. Correct? No, when you earn, income tax will come. You don't do nothing, income tax won't be there. Correct? No, income tax means what? When you have an income on there, how you earn income? By your operational activities. Correct? No. Right? On that only you will be paying income tax. Na? Right? So that's the reason taxes paid will be reduced. Suppose if it is an income tax refund, ma'am, I don't have tax payment, I have a refund. Add karo. That's it. Add tax refund, income tax refund, reduce tax paid. That's it. Then you will be finally arriving with net cash flow from operating activities. This is the way you will be arriving. Luckily, you have only MCQs. You don't have this method of you don't have descriptive questions or something where you will be solving the entire sum. Your MCQ might be how it will be asked is like whether taxes paid will be what is it, how what is the treatment of that, provision for tax, what is the treatment for that, and increase in the current asset, what would be the treatment. They don't give current asset, instead they will give the item of the current asset, maybe trade receivable, bills receivable, or stock, or what else you can have, any other current assets you can have. It depends upon it depends upon the industry where which industry they are going to give. And what is the treatment for short term borrowings, what is the treatment for trade payables, or provisions, or what is the treatment for dividend received, what is the treatment for profit on sale of assets. All right. So they will ask what would be the treatment rather than the format oriented questions. So this is how it will be. And based on this, you can answer all your MCQs. All right. I think we have solved few MCQs earlier. I'm going back to that slide. I think we have kept aside few questions, right? Earlier. So let me go to that. Okay. As per accounting standard, all right. Issues, dividend received, depreciation. We know it is a non-cash item. Depreciation is a non-cash item. All right. So that is an answer. Next one. All of the following would be included in the operating activity except non-cash item. In this, which one is all of the following would be included in operating activity except non-cash item. In cash received from debtors, we will take cash paid to creditors, will take income tax paid, interest paid on debentures. Alright, this one we will not take. It is not a non-cash item, sorry, it's a non-operating item. Alright, this question. I think we did some tax related question, no? Let me check. Yeah, here it is. I'm sorry. Alright. In these things we kept it now, right? So here what we did, where we kept it, cash paid to the suppliers, you know that this one we discussed, I guess. See, profits from trade receivables operating. Gross, it's wages and salaries paid. All right. Then interest paid on long-term borrowings. Office and manufacturing overhead, dividend received, rent received, selling, income tax paid. Now you know this. It is operating. All right. Next one, underwriting commission paid, rent paid, refund of income tax received, operating. Correct. I hope you guys understood now. All right. All right, the last portion of this cash flow would be few items. This I have explained already, non-cash item and forex gain. And again, this one, it's a non-cash item, remember. Not getting it? This is a non-cash item. Please remember, forex means, guys, understand in P&L, when suppose if I am doing a cross-country transaction, all right, if I'm doing a cross-country transaction, so what will happen now? While booking that, there will be, suppose I made a sale on say 1st of December. On that day, I made a sale to US. So on that day, the dollar was say 80 rupees per, 80 rupees per dollar. So I made 100 rupees worth of sale. So which means 100 rupees into 80 rupees, correct? So 8,000 rupees done. Now, what happened when that fellow paid me on that day? Suppose that guy has remitted me the amount. For him, it is only $100. So he remitted $100 to me to my bank account on say 30th December. Now on that day, dollar rate were 85 rupees. All right. So when I made the sale, $100 I made a sale. On the 1st December I made, on that day it was 80 rupees. So in my books I would have accounted as 8,000. 30th December I am receiving this $100 in my bank account. On that day the exchange rate was 85. Now in my bank account 8,500 rupees would have been credited. But guys, I have made only to an extent of 8k. Na? 500 is an extra I am receiving. So this is because of what? Forex. Correct. Now this is because of forex, that is foreign exchange rate difference, right? So this is a gain on rate, right? Because gain on foreign forex is the same way ulta also can happen, that is loss. But ma'am, why you said it is a non-cash item? Guys, understand, when I made a sale to that fellow, he will become my trade receivable, right? So when he is paying again, this will hit my trade receivable. So everything would have been taken a care in that, right? So that's the reason this forex, we will be very careful. If it is debited or credited in P&L, you need to take care of this. You are getting it? And business purchases also, you need to be very careful, because business purchase, mergers, acquisitions will be shown under investment activity. You have to take the purchase consideration. All right, there will be, I don't think so they'll be asking so detailed, because this is like CA level items. So this much depth I don't think they will be going ahead, because mergers and acquisitions and all, they don't ask how will you show, because there is purchase consideration, capital reserve, goodwill, so many things are there. You're getting it? I don't think so. This one we have discussed. Interest and dividends we have discussed, and insurance claim also, it's received on the based on the item. This one please remember. Suppose I have made an insurance on my building and on my goods stock. Okay. Now what happened? Fire happened in my factory. My factory building got damaged, and the goods, suppose I am a car manufacturer. The car, whatever that was there in the factory, the finished car, what I was there in my godown, fully damaged. Now insurance company came, they made a survey and they said, okay, fine, we will be giving you 10 crores for the building, and for the cars we will be giving you a settlement of say 25 crores or something. 100 cars were there, everything got damaged, done. Now 25 crores they will be giving it for car, and 10 crores they'll be giving it for building. Now understand, it's a cash inflow. There is a loss, there is a cash inflow. Now where will you show this? Building, that will be shown under investment. whatever you received against goods, that will be shown under operational, because stock is an operational item, building is an asset, fixed asset, so it will be coming under investment item. You are getting the point. TDS, I don't think they'll be asking this one, because first you should know what is meant by TDS, then only you can understand this. I'm leaving this TDS part because I don't think it is required for your level. Anybody know what is meant by, if you guys are working though, you might be knowing TDS, tax deducted at source, because employer will be reducing taxes on your salaries. The same way TDS will be done on the expenses and on some incomes also. All right. So this is purely income tax provision, and how for organizations we will be taking care. But at your level, I don't think so it is required. All right. So I think with that, we completed with cash flow, I guess. I have done all the cash flow chapter. So if you guys have anything, you just post me here. Any questions to be asked, you can ask now. So next class, we will be going ahead with funds flow. All right. And I think now that is numericals and the concept building, they have divided the class. Let me check, or do you want to solve, shall I go with the questions? Then we can, because we'll stick to that, or what? Let me decide. All right. So if you have any questions though, you post me now. I don't know the usual guys who used to come. I'm not seeing anyone. Eva and one more fellow will be there. No, what's his name? He usually comes. I'm not seeing those guys. So if you don't have any questions though, then I'll wind up. You guys have anything to ask, please? Or which syllabus you wanted to cover also, you can put it here so that we can take it up in the next class. You wanted to solve some sums though, you can put me there so I'll get some questions. If you want to concentrate on any other chapter, let me know here. I'll prepare for the next class. We'll see that in the next class. Any chapter, ma'am, this one, if you see it, though, it will be easy for us like that. Anything of that sort, let me know. All right, I'm not seeing any comments here. Okay, then if that is the case, though, then I'll wind up today's sessions. See you on the next session, guys. Have a great day tomorrow. Bye bye.